Hi everyone, my name is Moonshine and I am the host of today's AMA with nGRND, which is a protocol building a new blockchain-powered economy centered around preserving verified gold resources in the ground instead of extracting them. And we have David here with us who will be walking us through what nGRND ecosystem is all about. So before we start, David, would you mind introducing yourself and the team behind your project?
Sure. So my name is David Lucatch. Pleasure to be here. I've been in the online space forever, since the late 1990s. So I've seen Web 1, 2, and 3. I've been actively involved in e-commerce at the beginning of e-commerce, AI as far back as 2010, and blockchain and compliance and various asset classes since about 2015. So I've been around for a while. I've run multiple public companies around the world, Canada, the US, and Europe. Some of my favorite things to talk about is that I've actually worked on several of the Marvel movies. I worked on Avengers. I worked on Iron Man 3. I worked on Frozen, the movie Frozen, and I've worked on John Wick as well. So I've done a lot of work in the movie industry, sports industry. So again, a very varied career. Dinko Dinkoff, our CTO, is here. We have a phenomenal group of people that are experienced veterans in our project. Professor Lisa Wilson is our CEO. I'm the chair and she's the CEO, and her professorship is in innovation, and she's an expert in the mining and the technology industry. Our chief compliance officer and I have worked together for 30 years. So we've got a very well-heeled team, which is what you need when you're looking at the emerging area of real-world assets and how you bring those to Web3.
Thank you very much for that brief introduction about the team and how you entered, into building this project. So I think overall, while going through the website, I see the project as something that is very interesting. And so the first question I have is, looking through your website, I see that nGRND is essentially trying to create value from gold without extracting the gold itself. So now, what determines whether the preserved gold model can generate enough recurring value to sustain a token economy rather than simply just creating exposure to the appreciation of an asset?
That's a really good question. So let me start by saying, I know you keep calling it nGRND, but it's like a license plate with no values. We call it Inground, like in the ground without the word that, Inground. So, and that name kind of sort of solves it all. Let me start by saying, again, we start off with a real world asset, gold that is in the ground, and that is an asset. So if I'm a company that is a public company and I'm a gold exploration company, I have my assets which have gold in the ground and they have value. So we start with the value of the gold in the ground. The gold in the ground never has the same value as the gold in your hands. They're different. But the way this project works, and the only reason it works with gold, is because gold is really the only metal out there that doesn't really have very much industrial value. So about 86% of all gold that is mined, processed, and delivered is delivered as jewelry, bullion, coins, things that go back into stored value. So we're short-circuiting this process by saying the gold in the ground has value. We believe it's worth about 10% of what the gold out of the ground is worth. And we can create value not only from the appreciation of that gold, but also from what we call alternative land use monetization. And what that means is we can use the ground that the gold sits under to create waste plants, solar plants, do all kinds of reforestation. We don't have to disturb the ground to create value. We can actually create real world value from the gold and the land itself and share that value, those distributions, those revenues with our protocol. So we're not a traditional DeFi protocol where it's cannibalization of the token itself. We're bringing real world assets and real world revenues into our ecosystem. This is what the next, basically portion of the internet or Web3 is about. Blockchain is about taking real world assets, or I like to call them Web0 assets, and bringing their value into a protocol.
Great. I think this provides an insight into how you guys have structured the whole ecosystem, right? And one other thing I found particularly interesting is that, the project operates the upstream business while the nGRND operates the upstream business, while the nGRND gold protocol distributes value. So
Yes.
where exactly is the economic boundary between the company and the protocol, and what right does the token actually have over the value created by the nGRND Inc.'s activities?
Okay, so that, again, these are great questions. So Inground.com, which is our site program, Inground.com enters agreements with our gold companies. That's what it does. It manages the land and the process. It distributes up to 60% of all its value to the protocol. So the protocol is where we get value. Now, because it is a utility token, no one has rights over the gold. That is, it's a utility. That's not, if it was rights, it would be potentially a security. So it's a utility. We hold preserved gold we have a dual treasury inside the protocol that has both our tokens in one treasury and preserved gold in another treasury. And for every 35,000 tokens in circulation, we have a minimum of 1 ounce of preserved gold in our treasury. So our token holders, as they stake and enter a staking and rewards program, which I'd like to talk about a little bit later, really have access to the value that the gold creates. And so far, we have posted for our first stage of rewards $325,000 in USDT, USDC as our rewards. So our rewards are made up very small amount by our tokens. The vast majority is by the revenues that we generate from our business activities.
I think that makes a lot of sense. And that leads into my next question as well, because I saw on the website that it has been highlighted. You currently highlight 600,000 plus ounces secured under right agreements, but I noticed that the recent first class metals agreement itself references 386,465 ounces of inferred gold resources. So could you walk us through how secured ounces are classified internally? For example, what percentage is actually purchased or owned by the project, or what percentage is controlled through contractual rights?
All right. So that, again, you're asking, these are some of the best questions that we've heard so far. So you guys are really good at what you're doing. So I really appreciate that. What's important to understand is many of our companies that we deal with are publicly listed firms. So till our contracts are fully executed, we secure the rights and fully execute them, we won't announce them. Our first announcement is with First Class Metals out of the UK, and they're a listed company on the LSE, the London Stock Exchange. They have 386,000 ounces, and we've announced a deal to manage their property and the gold on their property, underneath the land on their property. As we do final executions of other agreements, we'll bring those to the table. Currently, we have, again, about 600,000 ounces in agreements, and we have well over 100 million ounces in our pipeline that is in discussion. So there's a lot going on. There is no shortage of gold for us to acquire. The key will be acquiring that gold and then preserving it and making it available to our gold treasury. And in the future, we're looking at a commodity token, and the revenues that we derive from our gold, from real world assets, from real world activities. We take up to 60% of that and put it in our staking rewards program inside our protocol. So our protocol is supported by revenues, real revenues, and by activities that our users do within our protocol.
Great. I really appreciate how you gave details into your answers. But before I proceed on to the next question, I just wanted to ask, I don't know whether it was the network or the glitch, but I wanted you to help me out with how to pronounce the project, because it seems I'm calling it out in letters.
Sure.
So is it like,
it's easy.
is it?
It's in in.
IN.
So that word is in, right? In. And then ground, GROUND. We just removed all the vowels. It's in ground.
nGRND. Okay, perfect.
Like
Thank you
something
so
in the
much.
ground. In ground.
nGRND, right?
Right. Yeah, in ground. Yes.
Inground.
Yeah. Like in the ground. Like if you bury something, it's in the ground. In ground.
Okay, okay, perfect.
Thank you.
So, next, to the another question I wanted to ask is, so if the gold stays on the ground, the protocol obviously cannot physically deliver those ounces to token holders, right? So what legally enforceable claim does the token holder have against the preserved gold treasury, if there is any? Or is the gold backing economic exposure collateral or a reserve asset or maybe something else?
Well, again, you know, if it's a utility token, it is not a security. Security implies that there's rights over the gold. In our protocol, there are no rights over the gold. The treasury holds the gold and distributes the economic value to our stakeholders through a rewards program. So it is a utility token, it is a protocol. The individual cannot have rights because it would be a security. So we're managing the gold in our treasury and we're distributing the value appreciation to our staking and rewards platform in the form of USDT and USDC where applicable.
Nice, nice. So let's move over to another aspect
Can I
of the
comment one more?
project.
Can I add one more comment, if you wouldn't mind? And why this is so uniquely different and why it is a blueprint for RWAs is because, you know, most protocols work that the token of the protocol provides the reward value. So if the token goes up, the rewards go up, and if the token goes down, the rewards go down. We have less influence by the value of our token because we're getting our rewards from real active business. And as we said, we've already got $325,000 allocated to rewards. Our expectation, again, not guaranteed, but our expectation over the next 3 years is up to $30 million in rewards. So those that come in, purchase our token, and stake them, get active rewards, and they participate in our network, and there's lots to talk about there, but they get real world rewards. And it's almost like there's an old saying in English, if you give a man a fish, he eats for a day. If you teach a man to fish, he eats for life. What we're doing in our protocol and our staking and rewards program is teaching people to fish. They buy tokens, they stake the tokens, and they get part of that value back in real world dollars, in USDC, USDT, where applicable, from the money that we earn in our gold activity. So we're sharing that with the network.
Great. Thank you so much for throwing that in there. It was definitely necessary for more clarity, right? So let's move over to the dual treasury architecture, right? Because I see that the website makes an important distinction between the preserved gold treasury and the protocol token treasury. So my question is, why was the dual treasury architecture necessary? And what problem would occur if the gold treasury and the token treasury were simply combined into one protocol treasury?
So you need a dual treasury because we have effectively an RWA as part of our protocol, our asset base, and that has to be managed by an independent custodian. So we have to ensure we have an independent custodian that ensures that all our preserved gold is backed up and under custody on the blockchain by a custodian, an independent custodian. So it gives us, again, as a Web0 or RWA asset, it gives us provenance. It gives us verifiable validity. And that's really important because, again, you're not dealing just with a Web3 asset, which is the token itself. You're dealing with an RWA asset, and you're earning value from that asset. So it has to be in a separate, segregated treasury. Both will be known, both will be on the blockchain, and everybody will see anything that happens. So there's complete transparency, but there is, again, structure, and this took 3 years to put together. And a lot of our own money, we put in our own money first. It took a lot of time, energy, and resources to make sure this was done right. And by the way, our white paper has been reviewed by an international law firm, and our opinion is clear. So it took us a long time to get this right, and it is a blueprint for future RWA projects.
Nice. And I also noticed that one of this treasury is actually governed by the token holder voting, and then the other is, less governed by it. So, and I think that was the protocol token treasury. So why did you deliberately make the protocol token treasury less governed by token holders? Is this intended to protect the protocol from short-term governance decisions, or is it because some operational decisions require centralized execution?
It's the latter. Some decisions require centralized, decision making. But yet some, if you read the white paper in detail, some are still relatively governed by governance itself. The challenge is ensuring that we have smooth operations while still creating value. So Web3 is just starting to realize the opportunity for RWA assets, and it's still a bit clunky. I'll just say that. Over time it will become smoother because you've got jurisdictional issues, you've got security, commodities, utility issues. So in our design of the protocol and design of the treasuries, we wanted to ensure that we had smooth operations that meet the expectations of our token holders, but still allow us to operate to maximize value for those token holders. So that's the reason it's been done that way.
I think that makes a lot of sense. And now tying in this protocol, right? Because another aspect that I see that this also ties into it is the staking reward model. And this protocol, I see that it is using a proof of stake utility reward as its framework, right? So
yep.
How does this work?
It's very simple.
Did you get me?
Yeah. I got you. So it's very, very simple. The more tokens that you stake, the more daily points you get towards the rewards fund. So the better your leadership position on the leaderboard for the rewards. And you can also do activities. We have 8 streams of participation activities. So if you do nothing, you get your daily rewards or daily points. And if you do more, you get more points. And the more points you get, the faster you move up the leaderboard, the higher percentage you get of the reward pool. It's a very simple transactional element that all gamers and all Web3 people will understand. If you're a whale and you just want to put money into the protocol, you can do so and get points every day and get your reward bounties. But if you want to do more, you can earn faster. So it's not just about the price of the token, because again, we don't rely on the price of the token for the network rewards. There's very small, just a small amount of tokens that go into rewards. What we rely on is the activities of the business. So the more that you do to promote the business, so you can play, you can learn, you can do impact, you can do well-being, you can refer, you can do advocacy. There's one more that I've left out, 2 more that I've left out, but one is we have something for AI agents. And so at the end of the day, the more you do in our network, the more points you get, and the more you stake, the more points you get. And those points convert into your percentage of the rewards pool, which at certain times you can pull out USDT and USDC. So it's built for gamers, it's built for Web3, but it's also built for passive activity. And at the same time, it's distributing real world value.
Nice. Thank you so much for explaining in very great details. And this next question might sound a little funny, and it's not like I'm saying it's eventually going to happen to Inground, but I just want to ask, just in case it might also be in the mind of anyone else listening. So let's say, for example, if gold appreciates substantially, but a protocol does not sell any gold-related assets, where does the liquidity for staking rewards actually come from?
Oh, that's a good question. Again, it's not just the realized appreciation of the gold. It's the land. It's the money that we generate from the land usage as well. So it's alternative land use. So the ground that the gold sits under. In some cases, there might be coffee plantations. There might be solar plants. There might be waste management plants. There's all kinds of projects, reforestation. There's all kinds of money that will be generated from the land itself, and up to 60% of that money, plus any money that we're generating from other activities, part of that goes in. So it's not just the appreciation of gold. It's the appreciation of gold and other factors that bring this to bear. And that's the difference. Because we're keeping gold in the ground, we're able to monetize the land as well. This is really cool situation. You can either dig up the gold and destroy the land and destroy the environment, cause issues. And I'm not saying everybody does that, but gold mining is a very dirty process. Or you can leave the gold in the ground, monetize the gold that remains in the ground, and monetize the land that the gold sits under. So it's really a multifaceted process using real world activities to fund the value of the staking and rewards program, along with all our other participation activities.
That makes a lot of sense now. Thank you so much for that answer. And just because you also mentioned the land model, right? The alternative land use model. So my question is, who bears the capital expenditure required to transform these preserved sites into revenue generating assets? Is Inground for funding those projects, or bringing in third party operators, or licensing the land to external businesses? What exactly are you guys going to do, or how are you guys going to go about this?
Yeah, I'm going to comment. You're asking some really good questions, and I really appreciate them. And so we have arrangements with third parties. We help fund the initial feasibility study. We get that money back, but these projects are all run by third parties. Inground.com is a land management company. We manage the land and the gold underneath. The protocol distributes the value of those activities. So Inground does not finance the creation of a solar plant or a coffee plantation or an agricultural farm. That is done through a third-party program, and we share in those profits, and then we take up to 60% of those profits and distribute them to a protocol. So our risk exposure is minimalized or nominalized by the fact that we have global third parties and global funding programs that take care of this. Again, this is a multi-year program built on 40 years of experience by our team, not collectively, individually, to put this together, and being actively involved in Web3 and blockchain for the last almost 11 years. We understand structure, we understand regulatory process. What we're doing is we're giving people access to gold that they otherwise wouldn't have access to. So we're making this a project where people not only can see the value increase potentially of our token because the company is doing well and the protocol is doing well, but we're distributing, instead of distributing tokens, which could have volatility, we're distributing real dollars.
Yeah, thank you so much for that. Something I appreciate about you is, you not overhyping what you guys are doing and staying true to the capabilities of the project. That shows the transparency behind the team, and definitely you also presenting. That's something I really appreciate.
Well, so do
So,
I. So do I. I see too many projects. You know, when you overhype a project, it usually means something is hidden. We're not. This is a simple project. We buy the gold, we keep it in the ground, we democratize access globally, and the money we generate from those projects we put back into our protocol. It's a complex web to create, but it's a simple project to describe, because everybody wants to get value from gold. They don't necessarily need to have it, but they want the value that it creates. And so we're creating a protocol. We've created a protocol that doesn't rely on just the value of the token. And the more people who stake, the more pressure it puts on supply, which could potentially drive the value of the token up. So you have a trading opportunity and you have a staking and rewards opportunity without cannibalizing the token as a reward and therefore increasing the inflation of the project. We're deflating the project by taking it out of the market, not putting more tokens into the market.
great. I definitely agree with you. And now I'd like us to push because I'm looking at the time. I definitely want to get in some questions here from the community. But the project is just very interesting that I tend to have certain important questions I would like to pick before I head to the community questions. So I want us to move over to the token itself, right? I know we have touched on different aspects involving the in-ground token, but then my question for you is, what causes demand for in-ground token itself if someone believes in the preserved gold thesis but doesn't want to participate in staking? What creates organic token demand beyond just the reward incentives?
Okay, so that's a good question. First of all, to participate, let me go back for just a moment, and I want to make sure everybody knows this. To participate in our ecosystem, you not only have to stake, but you have to have what's called a dynamic soulbound token. That's your membership, and those are free. So you can get in by and you can go to our website and sign up for a dynamic soulbound token for free. There's no cost for that. But this is traditionally a supply and demand model. We already have people. We have over 900,000 people who are already playing our games and registered for our gold games, and that is through our Dig It program and our Gold Fest program. So we've already got almost a million people actively involved in our network, and we're just now starting to issue them dynamic soulbound tokens, or DSBTs. Those people will all have a staking position. So again, it's all about supply and demand and the pressure. It's very classic. The more people that stake get value. Down the road, we are planning a commodity token where you can actually have rights over the ounces of gold, but that'll be separate, and you'll still be able to participate in our protocol. It'll be connected. But the whole idea is, if we were a DeFi protocol, true DeFi protocol, because we're more of a Web0 RWA protocol, if we were a true DeFi protocol and we gave out our rewards and tokens, you're going to inflate the number of tokens in the market. We're not doing that. So it's a fixed supply we're not giving out tokens. So we're giving out our rewards as dollars. So we're keeping pressure on the token, because those that want to trade the token may find fewer and fewer tokens in the market if people are getting USDT as rewards. Does that make sense to you?
Yeah, it definitely does. Definitely, it does.
Yeah.
Thank you very much.
My pleasure.
You can go on.
If I might just give everybody a quick plug before we move on to questions. If you go to nGRND, Inground, ngrnd.io, you can get your free DSBT, no problem. But if you go and sign up for more information, and we haven't even opened up our pre-sale yet, we have a lot of dollars already booked for pre-sale, but we haven't opened it up yet. If you go and sign up at the contact side and you use the word gold digger, okay, if you put in GoldDigger, will provide you with an extra incentive to if you want to participate. So go to inground.io. You can get your free DSBT, no problem. Look at value proposition. It says free DSBT. And you can also sign up as a contact and use GoldDigger, and we will give you an incentive when we open up our opportunity.
Wow, that's very amazing and interesting. I want to say thank you on behalf of everyone listening. So, guys, don't forget to sign up just as David has explained. It will still be re-emphasized towards the end of the AMA, so everyone can definitely get involved with the Inground team or the project. So the last question I want to throw in here is about the partnerships and scalability. I see that Inground has already worked with gaming partners and is supported by Torn, while Base is among the networks mentioned for future expansion. So what is the actual strategic role of the blockchain partners? Is Inground fundamentally chain agnostic with blockchains, or will different chains have different functions within the ecosystem?
No, I think what we will have. I mean, we will have bridges and cross chain opportunities, but our token, as of today, our token is being issued on Base. We do have ton based games, but what happens is we almost have sort of our own bridge internally, and I'll explain this. We our partners, when you play their games, you get their rewards plus our rewards, which go help you build your leadership in our staking program. So and with Digit and with Goldfest, you're going to get certain other tokens, quote unquote, that you can trade in for Inground tokens. So we're making it a very simple process. Come to our ecosystem. Again, start for free. There's no obligation. Get your DSBT. We'll give you one virtual token and start the process. And then start earning points and rewards, and you'll get a piece of the rewards pool. We've made this so simple. It's not complicated, but it is economically value. And you know, the problem is always when you add complexity, you add mystery. When you add mystery, there is lots of margin for the company that's making the mystery. We are not mysterious. We are very transparent, very simple. Come in, purchase our token. For the best thing you could do is stake it, earn rewards, activate, participate, get more rewards, and get distributed value from our rewards pool. We're not making it complicated. We're keeping it really simple.
I think that makes a lot of sense. So we would now be giving it to the community to ask whatever questions they have. I can see tons of questions in the chat, so I'll be reading through to pick out a few. But if you want to ask a question live, kindly signify by raising your hands and you would be unmuted. So we have Minze. Minze, you can go ahead with your question, please.
Don't be shy.
Okay, I think Minze is probably having one or two connection issues. So let's have Peter ask a question.
People may be having the same problem with the microphone that I did, right? I had to change my microphone.
Peter, try to leave the chat and rejoin. Sometimes Telegram can be funny. Yeah. So try leaving the chat to rejoin and let's see if it gets better.
Yo, James.
There you are. We can hear you.
Hello?
Go ahead, Peter. Yeah, we can hear you.
Oh, all right. Sorry, my bad. It was my network. Okay, so my question goes like this. Okay, gold has traditionally been valued through extraction and physical ownership. What new economic model is your project?
Okay, all right. So
We can't seem to get
Well,
Peter's
I got
question
part of it.
clearly.
I got part of it. So
Oh, really?
yeah.
Okay.
So let me read that. Let me say that back. So gold is traditionally valued in specific ways, and how does our new economic model work? Well, it isn't a new economic model, to be honest with you. It's a very old economic model. So companies that have gold, that have found gold, many of them are already public companies. They're already public companies, but they have lots of gold in the ground and they can't monetize it. So they have trouble raising more money. We're coming in and buying the gold that they have in the ground that's already found. It's discovered, and we use proven methodology. We use government approved standards, internationally approved standards, and then we take a discount on the gold that they have to make sure that we're doing something properly. So at the end of the day, we're using methodologies that already exist. We're just not taking it out of the ground. So we're valuing it at 10% of what it would be outside of the ground, which is a standard methodology. Everything we're doing already exists. We're not creating something new. What we've done is we've packaged it up, created a new structure for it, used blockchain and Web3 to make this work in a new and innovative way. So it's not new process, it's innovation. And how do most projects exceed? By innovation. If you look at Amazon, Netflix started out by mailing games to people. So what are they today? They're one of the largest, streaming companies in the world. Amazon started by selling books. They innovated the business that already existed. We're innovating a 5,000-year-old business to bring it to the blockchain and Web3 in a way that is understandable and democratizes the access to this without the massive cost of exposure. So we're making it very simple to participate and gain rewards without having to actually spend all the money to purchase this gold. By you, not by us, but by you.
Yeah, I mean, his network connection was bad, so that's why I had to mute, because the feedback was a lot. So I hope that answers your question, Peter. But just to help him again, there's a question in the chat here from Peter again.
Yeah.
Let me just help him ask the second question. He says, how does Inground balance the interests of token holders, mining communities, landowners, and environmental stakeholders while building a sustainable gold-backed ecosystem?
Okay, so again, I think I've talked about this. Well, the value to token holders in our protocol, let's talk about our protocol, is quote unquote the value they receive by the appreciation of gold in the product and the programs we run. So that's pretty easy. You're receiving the sort of the value without nominal exposure. You don't have to invest. You don't individually have to invest in the gold. We're buying the gold. For mining companies, it's really so simple, and it's not really for production mining companies because they're already producing gold, but it's for the companies that have found gold, or on the other spectrum, it's the companies that have gold properties that are now retired and maybe have economic and environmental issues. So we're allowing them to capitalize on their resource without diluting the capital of the company. So for them, it's a massive win. And they're not selling 1 ounce at a time. We're buying massive volumes of ounces at a time. And then for the industry at large, it's even simpler. We're not destroying the land. For the world, we're not destroying the land. We're actually increasing the value of the land and doing something with the land and keeping the gold in nature's vault. And we know the gold is there because we're using industry, government, and globally accepted standards. In Canada, it's called a National Instrument 43-101, but around the world, there's a couple different names for it, but they all follow the same pattern. You have to have geologists sign off. You have to have audit committee sign off. So at the end of the day, we're doing all the things right and making sure that everyone in the ecosystem can win to the best of our ability.
Okay, so I hope that answered your question, Peter. So thank you so much for throwing in that question. So let's have a live question here from Jerry. I hope Jerry is able to speak on the mic. So go ahead with your question, Jerry.
Yeah, I think I'm audible, right?
Yep.
All right. Nice to meet you, David. Thanks,
Nice to meet you.
Moonshine, for yeah. Thanks, Moonshine, for meeting me. And David, nice to meet you. I love your whole journey from Web 1 to Web 3, and it's a nice journey. Whatever you said about the first introduction, I want to say I love your journey, and it's quite inspiring. Yeah. So basically, the question I wanted to ask is based on your evolution as from uh, Inground, Inground, right?
Yes.
So Inground preservation first model has the potential to extend beyond Web3. Now, I just want to know if governments or like mining companies or environmental organizations were to adopt this approach. Do you see Inground evolving to a infrastructure for sustainable resource management rather than remaining solely in the crypto protocol? If so, what's the evolution look like, and what milestone will signal that transition?
So Jerry, there's a couple things I want to answer to. First of all, we only work on projects that are in geopolitically stable regions. So we work in Canada, the United States, parts of Mexico, parts of Central America, parts of South America, Europe, and Oceania, and a little bit of Asia. There's obviously countries where we can't ensure that 30 to 100 years from now that the geopolitical environment will allow the gold to stay in the ground. So we're very careful what we do. Second of all, we only work in the gold industry because gold, again, is the only metal that we believe, based on 86 to 90% of the gold that comes out of the ground goes back into storage, that we believe can stay in the ground. There's enough gold being produced currently, and we're not against producing gold. So we're not tree huggers. We just have a different model. We are looking to long-term introduce a commodity token similar to Tether or Pax that will allow our gold to be held by individuals. Still, the protocol will have, you'll be able to stake that gold and participate in our protocol. So there are two different aspects of our program. One is the gold itself, and the second is deriving value from the gold. And the protocol derives the value from the gold that we hold and shares that with our network. So the more work you do in the network, the more rewards you get, and the rewards are generated by the revenues that we generate in the real world, like any other business. But this is the gold business, which generates lots of value. I mean, gold is up, 20%, 22% in the last year. So at the end of the day, we're generating, tangible rewards. So what we're doing is we're not reinventing the wheel. We're just making the wheel better. If that makes sense, Jerry.
Yeah, it does. It does. So you for what you said, I believe you mean that you're not trying to go further, but you're trying to reinvent what's it's the idea of good preservation and things like that. Am I correct?
Yes,
All
that
right.
is true. Yeah,
All right.
creating measurable impact from ESG and SDG programs.
Okay. I understand that, and I appreciate the clarity and the transparency. Thank you very much for answering the question.
Thank you.
Yeah.
Thank you so much, Jerry, for throwing in that question. So let's have a question here from OVA. You can go ahead with your question, please. So do we have you here? Okay, let's have Lindsay back to ask a question. Lindsay, you have to unmute your.
Hello, can you hear me?
You got two people speaking.
Can you
hear me?
Can you hear me?
Yeah, I can hear you, OVA. You can go ahead.
So, thanks for having me, and thanks for that wonderful. So my question is, Inground is taking a very interesting approach.
I can't hear him.
Can you hear me? Hello, can you hear me?
Yes, I can try. Yes, go ahead.
We're getting a lot of feedback from you, OVA. So if you can send your question to me and I'll help you to read it out. I think we had Minze trying to speak to as well. Let me see. She sent her question to me in the chat. So I don't know what's happening today. Everyone's network. I don't know.
It's
Minze is
Monday.
asking.
It's Monday. It's the Gremlins.
So Minze is asking, have you been involved in any project similar to this one? And what challenges did you face? How did you overcome them? And what measures are you taking to avoid such mistakes?
So again, it's uh, personally I have 40 years. Well, not 40. Let me just say. So 26 and 4. So I have 30 years in the internet. So I've pretty much seen it all, invented a lot of technology. So I've seen a lot of mistakes. The ideal situation is if you don't learn from your mistakes, you're foolish. So make mistakes, just don't make the same mistake over and over again. So that's number one. Is our philosophy is to make mistakes, to break things, but know how to fix them and move forward. Two is get yourself a phenomenal team, and we have a phenomenal team. So get best people involved that can help lift you up. A good entrepreneur surrounds themselves with people that know more than they do and learns from those people, regardless of age. It's not an age thing. It's an experience thing. And then last year, I did a friend a favor, and I was the chief investment officer just to help them out of a major organization in Dubai. So I have and I am an active investor with my own family office, and so I've seen projects, I've built projects. So all I can say to you is I've got the bruises and the bumps and the broken bones from doing this in the past. The ideal situation is not to repeat it. So we've got great people around us that are keeping us safe or helping us keep safe. We've got great professionals around us. And again, our white paper, we on our protocol itself, we had no changes to our white paper from the legal opinion. It just had to do with some of our game strategies. So we've learned from our mistakes, which we've had many in our career, and move forward with this. And this has taken, again, almost 3 years. In September, it'll be 3 years to bring this to market. So we've done it slow and methodically. And as Moonshine so politely pointed out, we're not a hype cycle. We're bringing real active Web 0 business to Web 3, which we believe is the next generation of business that is not a hype cycle, but a value cycle.
Okay, I hope that answers your question, Minze. If you still have more questions for clarification, you can definitely head to their channel to ask more questions. So let's have Ovie ask the last question for today.
Sure.
Let's give him another chance.
Okay, thanks for having me, Moonshine. Hope you can hear me well now.
Yep.
So my question actually is, Inground is taking a very interesting approach by preserving verified good resources in the ground rather than extracting them. So how will Inground independently verify the quantity and value of these underground gold resources? And what mechanism will ensure that the on-chain tokens remain transparently and credibly backed by those reward reserve over the long term?
Okay, so again, that's a great question, but an easy one to answer. So we start with the analysis that is done for public companies that has auditability, has government reporting. So I think I've mentioned this, but in Canada, I'll just use Canada as an example. There's something called a National Instrument 43-101, prepared through geological and drilling studies that says this is how much gold is here, and this is the classifications. So if there's 1 million ounces of gold in the ground, we, depending on the classification of gold, we will only create preserved gold out of a certain amount of it, depending on its classification. So we take a significant reserve position on the gold that is proven to us exists. That way we ensure that if the gold is ever dug up, I'm not saying we would ever do it because we only work with programs that are currently not economically viable to extract. but that gold would be there. So we are very risk adverse. We're risk off on the numbers to ensure the gold is there. And our job is to create value without extraction. So if you had 1 million ounces and we did 1 million ounces, we'd be fooling both of us that that is perfect. So we take a significant reserve on that number before we go and turn it into preserved gold, if that makes sense.
Does that answer your question?
Yeah, it did. Thank you. I really appreciate it.
Great. It's what we're doing is relatively simple. Why is it new and innovative? Because everybody has scrambled to build something that hypes and in most cases crashes. And we've seen this ourselves. We've all seen this, right? How fast can I get in? How fast can I sell? We're building long-term value based on an industry that has existed for 5,000 years, but has been unable to take advantage of what's gone on in blockchain and Web3 and the beginnings of Web4, right? We're using AI because we've been in AI for 15 years. We built a network in 2010 using AI that had 200 million users on a monthly basis. So we've done this. We've seen the cycles. We're taking Web0 projects in gold, and we're bringing that value to Web3. So, and we're adding gamification and participation and all the goodies that everybody wants, but we're doing it to create value and for people to earn value. So it's not really complicated. If you're into gold or you believe gold has a long-term value and you're into, earning rewards, then, I would suggest do your own due diligence, but look seriously at us. Go to our website, inground.io. Go to get your free DSBT. Do that immediately because that's a free value to you. And there's no cost and no obligation. And you can start earning points right away. But go to the contact section and, put in your email and put in GoldDigger. And when we're ready, we'll send you out an offering that's got value to you. We're not asking you to buy anything today. We're asking you to look at us, judge us, and hopefully you see the same thing we see.
Thank you so much for throwing in more light, and we really appreciate that. Caleb here wants to throw in one question before we round up the AMA. I hope we are not making your back ache, right?
No, I love this. Thank you so much. And let me just a shout out to you, Moonshine. You've done an amazing job.
Thank you so much. And it has been an interesting section so far. So let me give the floor to Caleb.
Hey, David, how's it going, man?
Good. How's it going with you, man?
Yeah, going pretty well. I just want to say kudos to what you and the team are building. Really great stuff here. I'm a very big fan of RWA. We've had so many here at GoldDiggers, right? And I'm also a proud investor of so many RWA projects. But with what Inground is building, it's really I can say Inground is a whole different animal, right?
Yes,
So.
very different.
But here's my question, right? Like there are already like gold pack tokens, like for example, PAXG, Tether Gold, where investors get exposure to physical gold stores and vaults, right? And like I said, Inground is a different animal, right? Because your gold is not even being minted or voted, right? It stays underground. That's something really unique. But my question is, if I'm already holding a PXG for gold exposure, what's the actual reason for me to also hold Inground, right? Is it that Inground is a different type of asset with maybe additional value, beyond the gold price itself, or you ultimately competing for the same investors that are looking for gold or safe haven exposure? I don't know if you get my question, man.
Yeah, I do. I understand that. So let me say that today we have a network protocol that is built on the value from the gold and the alternative land use monetization. So you're not, the exposures are different. When you invest, and we're not asking you to invest because it's a different word. That means it's a commodity or security. When you invest in holding, vaulted gold, and I challenge everyone to look at whether the gold in any of those vaults have actually been audited. Like I haven't seen a pure audit on any of the gold, and I'm not saying that it isn't there. I'm just saying, it's not your gold; it's someone else's gold that they're giving you exposure to. We're doing exactly the same thing, but we're giving you value for the increase, the appreciation. You're not quote unquote investing in the gold yet. Now we will have a commodity token that does cover. That's our goal, is to have a commodity token where it does give you exposure to the in-ground gold, but our token will be at 10% spot versus 100% spot. So that's an exposure. But today, we are a different animal, and the reason we're a different animal is because we're taking the value appreciation. You're getting rewarded for your activities and your participation, and or just being passive in our network, and reaping the reward from the value increase from the gold itself and the alternative land use monetization and other things that we generate. So it's not just about the exposure to gold; it's about the value it creates. If that makes sense, Caleb.
Yeah, no, I mean that makes a lot of sense, right? I mean, at the end of the day, we are looking at value, right? That's the most important thing when we're looking at the gold itself, right? I really appreciate you, David. Thank you so much for coming to the GoldDiggers
Thank you.
community to let us know this animal, right? To let us know what you guys are building, and probably hopefully in the future, if you guys have like crossed so many milestones, we can really get to have you guys back here as well.
We'd love to come back. Thank you very much, and we'd love to share our program with your team, and invite everyone, and we'll invite everyone in the channel to get our free DSBT. It doesn't cost them anything and gets them started in our ecosystem.
Yeah, definitely. I'll ask definitely our team to get it posted for the community, and maybe a little bit of instruction on how they can go about it as well.
Yeah, no
Thank you so
problem.
much.
Thank you so very much.
Yeah, thank you so much for jumping in on the mic. So this is how we wrap up today's AM. Maybe before I close down the VC, David, I'd like to give you the floor to give the concluding statements.
Well, thank you so very much. I appreciate everybody who joined us today. Moonshine, you did an amazing job. Caleb, thank you so very much. Again, I'm not here to shill. I'm not here to sell. I'm here to invite you to go to our website, Inground, ngrnd.io. I'm inviting you to get a free dynamic soulbound token, which gives you access to our network. And I'm inviting you to join our waitlist. Effectively, go to our contact, join our waitlist, and use GoldDiggers so you get a special value. And learn more about what we do. Keep in touch with us. The next few weeks, we'll be opening up our first round of opportunity, and we invite you to come in and participate. And again, the more that you participate in our ecosystem, the larger the percentage of the pool of our rewards you get. And right now, our first reward pool is $325,000 USD. So it's pretty exciting where we're going. We create value without extraction, and we invite you to join our journey.
Thank you so much. And don't forget, guys, to type the Inground or could you walk us through that again, David, so they know the incentives that they would be having?
Sure. And I can post them as well in the community, but go to Inground, ngrnd.io, get your free DSBT, and just join our waitlist and put in GoldDigger, and you'll see the spot to put it in. And we'll get you on our list and share our updates and opportunities with you. Inground.io, ngrnd.io.
Thank you so much, David. It was a very great AMA section with you. And I just want to say great kudos to your team. And so, guys, if you know you enjoyed today's AMA, still do your own personal research. Go on their X, because that is where you get updates about the project itself. Join them on their Telegram channel. And, if you want to get a part of the project, then you can. Thank you all so much once again. I'll see you guys in the next AMA.
Thank you so very much. Bye for now.